day, everyone, and welcome to the weekly outlook for the week of August 11, 2013. Weekly outlooks is something I do when markets are quiet and or near record highs. And right now, we have both criterias being met. So that's where we are, and that's why I'd like to analyze some markets for you today. Expect volatility towards the end of the week when news relating to interest rates and employment is released. This is what Feds, hedge funds, and large banks are looking at right now, and this is very important. The S&P 500, and what you see is the 10-day RSI indicator imposed on the chart. I use this to measure overbought and oversold levels. Many traders like to use the 14-day RSI, but I prefer to use the 10-day RSI because I find it reacts better to shorter-term time frame than the 14-day RSI. You can see the S&P peaked out and touched the overbought levels earlier in the week, but backed off rather quickly. Right now, we are drifting downwards in what looks like a bullish flag pattern. And a bullish flag drifts downwards, just like you see here. There's very little in terms of news for the first half of the week, so I'm anticipating the market to continue sideways, choppy action for the next few days, unless we see something really unforeseeable, and I don't think we're going to see it this week. Comparing the S&P to the NASDAQ, you can see that the NASDAQ is not as angled downwards as the broad market. This is showing us that the tech stocks minus the semiconductors are stronger right now than the broad market. And if semiconductors decide to join the rally, I think we would break higher and see stronger angle to the upside in this market, especially in the NASDAQ sector. Looking at the semiconductor sector, there's obvious distribution taking place. The highs are getting lower and the lows seem like they're ready to break through to the downside. The bearish triangle can break and we see the 36 level on the subsector within the next few days. However, I don't think we will have much volatility till the second part of the week, especially the type of strength we need to see the break to the downside. It's summer and the low volatility can work for us or against us. So I think a lot of it depends on earnings in the first part of the week, and then we will see how the market is reacting to this sector in particular. Keep in mind that the semiconductors do have substantial weight in the NASDAQ index, and if they move strongly, we could see it bringing the NASDAQ weaker as well. Looking at the gold market, it looks like the market is really trying to break to the upside again. I'm very skeptical this rally is real, and I'm looking for every dollar to the upside as a shorting opportunity. The next upside resistance is 1400, and we're still a while away. Let's see if we can break the 1350 level and how we react around that level. But for the next few days, I'm not anticipating anything out of the ordinary and more of a drift than anything else, at least till we start seeing volatility in the bond market, which is the market we want to look at next. The bond market has been range-bound for almost 2 months now, and I can understand why. There's strong uncertainty in the U.S. economy. One day we hear news that it's going to be cut, and the next day we hear the Feds talking about being very reasonable and keeping it going for several months. Till we have certainty, there won't be much direction in this market, and the fundamentals are coming through right now in the trading action, believe it or not. My advice is to take advantage of the overreactions in this market, especially those to the upside. The long-term trend is down, and on a fundamental level, it will stay that way for a long time. There's nothing on the horizon that says interest rates are going to stay down. The question now is, when are they going to go up? So be careful and trade to the downside. Expect 127 level and 125 level to be the trading range, at least till middle to end of this week, and probably longer if I have to guess. Many traders are curious about the crude oil market this week. It seems like we were posed to break to the upside, but we failed, and now it looks like the market is going for a third round. I find the triple tops lead to reversals most of the time. So I want to see if we can take out or simply reverse once again when we come to the previous 108 level. I want to see if we can take the high out or simply reverse once again when we go near the high 108 level. From the looks of this market, we're not going to go higher this time around. And the next question will be, what happens after we test the high 108 area? The 102 is the support area, and we can go down a lot if we break that level, but the bulls are not giving up just yet. And I want to see how strongly we can react when we reach for the high one last time. One thing I'm looking at is the fundamentals regarding the output of oil. This is coming out in the middle of the week, and I need to see what the estimations are compared with the actual numbers before making any conclusions. But I will say that the longer we stay at these levels without breaking the highs, the more bearish traders holding longs at these levels are going to get. And a lot of tension that can really cause volatility if we start showing a bit of weakness to the downside. Lastly, I got several very nice emails from traders who took my advice regarding Apple computers. If you recall, I provided a long tutorial about stocks that move against the main trend when earnings come out, and then within a week or 10 days of moving against the trend, they move right back in line and begin moving once again, like they did before the announcement. One demonstration was Apple computers, and I think this chart really says it all. We huffed and puffed after earnings and moved a total of 30 points, which is less than 10% of the price of the stock. While 30 points may look like a big move, you have to remember this is equivalent of a $50 stock moving up $3, which is very little. It moved less than 10%. That's why I'm not using $5. I'm using $3 to $50, which is about 8%. Further, the last 3 days, the stock was much weaker than the broad market or the NASDAQ market, which further demonstrates that the momentum we saw from earnings is gone, and the stock is going to revert to where it was before. I'm selling Apple at these levels, and my target is going to be the support level, which is the 400 level at this time. And I will update you during the week as things develop. So let's see how things go, and I think things are going to start out slowly. That's it for Sunday night. Good night, everyone, and have a great trading week ahead, and I will keep you updated as I always do.